Hi traders, welcome back. You're here with Lance Beggs, yourtradingcoach.com, and in this video we're going to discuss another short-term reversal pattern, the island reversal. The island reversal is applicable at both top reversals and bottom reversals. Let's look at the top reversal first. Like all of the top reversals we've looked at so far, the setup involves price action trending upwards. And ideally, if it trends into an area of resistance, we've got a higher probability of reversal. The island reversal pattern then forms involving two bars. From the uptrend, price gaps up to the first bar here and is unable to close the gap. And price then gaps down to the next bar and once again is unable to close its gap. Why is it called an island? Well, picture all of this price action here as the mainland, with the island positioned separately offshore up here. So we have an uptrend, a gap up to the island, a gap down to the following bar, with both gaps remaining open and the island floating above price all on its lonesome. Please note that the position of the open and closed tabs on each of the price bars here, here or here is irrelevant. So this bar here, which you might recognise as an open-closed reversal, it doesn't need to be this way. It could be anything. In fact, it could continue the bullish sentiment and close much higher. It doesn't matter, as long as it doesn't close this gap. And also the position of the final bar, reference the end of the trend, here is irrelevant. It can be a bit higher, as in this case here. It could end up equal, or it could close down further. It doesn't matter. Obviously, the further down it closes, the more bearish the signal, but in terms of definition, that's not important. We're simply looking for a gap up and a gap down which haven't closed. Provided we have the gaps, it's an island reversal. A variation of the island reversal is the island cluster reversal, in which the single price bar island is replaced by a cluster of price bars, or a group of price bars. Once again, provided we have the gap up to the cluster and the gap down, it's a valid pattern. Confirmation of the pattern is price continuing the down move and trading below the low of the pattern at this point here. Where would you put the stop loss order though? Well, depending on your risk tolerance, you might wish to place it above this bar here, or above the gap, or above the island. Of course, if we look at the definition, which requires the gap up and down, that tells us that the pattern will be invalidated if the gap is subsequently closed, this gap here. So if you want to use the invalidation of the pattern as your stop loss criteria, it would have to be positioned at least above the gap, if not above the island and swing high at this point here. Like the key reversal which we discussed in the last video, the island reversal is quite a strong indication of a change of trend. Let's look at how this works through a discussion of the psychology or sentiment of the pattern. We start with an uptrend. Bullish sentiment, demand greater than supply, driving price to higher and higher levels. Bullish sentiment continues with a gap up to higher levels again, maintaining sufficient demand to ensure that the gap can't be closed. So we have a gap up with a higher high, a higher low, and a higher close. Bulls reign supreme. However, what happens next? The next bar opens with a gap, but this time it's down. Why has that occurred? It doesn't matter. Something whether technical, such as resistance at these higher levels, or perhaps something fundamental has caused an increase in supply and driven price down to open lower. Some of the bulls will be spooked sufficiently to close out part or all of their position, adding to supply or selling pressure, and other bears will enter the market short at this point, preempting the confirmation of the island reversal. The increase in supply has been enough to overcome any additional demand at these lower prices and keep the price from closing the gap. Confirmation through price trading lower, below this point here, will lead to a further increase in sell orders, a swift and decisive victory for the bears. Of course, the downtrend is just the opposite. Price trends down, ideally into an area of support. Price then gaps down and forms a lower price bar which is unable to fill the gap. And price then gaps up from that lower price bar, and it's once again unable to fill this gap here, leaving the island stranded by itself and meeting the definition of an island reversal. Once again, the location of the open and closed tabs in all of these price bars is not important, and the position of the final bar, reference the end of the trend, is likewise irrelevant. Provided we have a gap down and a gap up and the gaps aren't closed, it's an island reversal. Or an island cluster reversal in the case here where the single price bar island is replaced by a cluster or group of price bars. Once again, provided we have the gap down and the gap up which aren't closed, we have a valid pattern. Confirmation of the downtrend island reversal is price trading above the high of the pattern, and the stop loss should be positioned at least below the gap, if not below the whole island and swing low at this point here. As with the reversal at the market top, the pattern is invalidated by a closing of the gap. And the psychology is reversed as well. Simple stuff, hey. Price trends down, supply overcoming demand, with the bears clearly the dominant force at this stage. The bearishness continues with price gapping down and forming a lower price bar which is unable to close the gap. Everything is looking bearish. However, something changes. The bulls stage a massive counterattack as increasing demand or buying pressure overcomes the selling to open price higher. This attracts further buying pressure as other longs join the fight in an effort to enter the change of trend early, and some of the bears take partial profits or fully cover their position. This increase in demand is strong enough to prevent a closure of the gap. Confirmation through price trading higher again will bring further increased order flow, leading potentially to a change in trend. Let's see some examples. Here's Apple Computers on a daily chart. Price trending downwards towards an area of previous support at and just below the 120 level. It gaps down to this price bar here, which is unable to close the gap. And you may recognize that as well as a bullish rejection bar, which we discussed in an earlier video. The following bar gaps up with sufficient demand to prevent a closing of that gap as well, and confirmation through price trading higher leads to a change of the trend. And moving across the ocean to Australia, we have Alumina. A rally up, stalling just below the $8 level. A strong retest, actually gapping up at this point. And the blue bar closing not only above the previous swing high, but also right on the $8 level. The second bar though couldn't maintain the momentum, closing slightly lower, and likewise for the third bar, which actually closed below the previous swing high. Now, if I was a novice breakout trader, I'd be a little concerned right now. If price was bullish, shouldn't it be continuing higher? But then on the other hand, I'd probably be able to convince myself that all is okay, it's simply pausing before continuing higher. The next day though, I'd see that price has gapped down, was unable to close the gap, and in fact closed very close to its low. Panicking, I'd place an order to exit on the open the next day, along with many other breakout traders, or at least those with enough discipline to exit, propelling price further down into a change of trend. So we had a multi-bar rally, gapping up into new highs and round number resistance. 3 bars unable to continue with the new highs or with the breakout above resistance, and a gap down which is unable to be closed, providing a nice island cluster reversal signal. Okay, so coming up in the next video, we're going to look at the pivot point reversal. I look forward to speaking with you again soon. I'm Lance Beggs from www.yourtradingcoach.com, wishing you, as always, many profitable island reversal patterns.